That was so quick. Was that the full intro? Oh
Yep.
my gosh, I'm like doing hella stuff.
How are you, Jolene?
You know, today's the new day. I'm good. How are you doing?
I am fantastic. I am blessed and highly favored.
All right, now preach.
You ready to get going? There's been a lot
Yeah.
going on today. Like we've seen a lot happening in the past. Like, well, first things first. Did y'all miss us? I know it's been about a what
2 weeks.
2 weeks now. Like,
Mhm.
yeah, this is. I like this new format. 2 weeks, getting used to
Yeah.
things and everything else. So,
It's a good ease back, into the
I'm back in a
swing.
familiar environment and everything
Mhm.
else. The sun's still shining out here in the great
Yeah,
northwest.
it's still so sunny out. Like I had to adjust my lighting because it just wasn't. It was not giving. So
Yeah, I'm even rocking I'm even not an endorsement, but I mean drinking some liquid death because feels like today I might choose violence. So
oh Lord. Well, I know we have a lot packed in this episode. So I'm really excited for the cousins.
indeed.
Um, yeah. So should we get officially started? I feel like we just.
I know we just over here like sipping water and everything else. It's gonna be a lot of sipping today. I come I come very hydrated. So
Yes.
let's get it going. What's good, everybody? I am Mark Monroe, accompanied by my wonderful co-host, co-producer, co-creator, and of course, we got to add in the fresh new title. Give it up for the GCEO, none other than the wonderful.
It's still NGC in the place to be. What does it, cousins? On this fine Tuesday, I'm so happy that we're back.
Yes, and welcome back to the Come Up series. If you missed last week's episode, go ahead and check that out after this live. But I mean, if you checked it out, like we definitely did some things, and I think that this week we may have to also pop out and show people. So yeah, I'm
Yeah,
ready.
I'm excited. I'm ready. I'm ready.
Okay, so where do we
Um,
get started?
okay, so first of all, let me just say that I love seeing all of these greetings from the cousins from all over the place. I just saw someone say something from Curtis from Ann Arbor, Michigan. Hey now. And I
Nice,
see Uncle
nice.
Charles and I see all kinds of people. So welcome back, y'all. We're so excited that you're here with us. So Mark, for today, I was sitting back and thinking about what would be good for today.
Okay.
And as I was thinking about that, I feel like we need to, kind of get back to some basics, but with a twist. What do you think?
Okay. I'm for it. Let's do it. Let's do it.
Yeah. I also think we can talk about some, global impacts, tech trends, that sort of thing, but like
Okay.
in the context of an oldie but goodie and something
Hmm.
new.
I see where you're going with this. You know what?
Mhm.
Drizzle,
Something
drizzle. Let's do it.
classic. Something really classic to the Come Up series. What do you think?
Something maybe like this,
Yeah, I
perhaps.
think so. I
You
think
know.
so. That's the
So
type of time I want.
we'll save that for
But yeah, like definitely get to that. And let me see. I definitely want to talk about, some strategies,
Okay. Uh.
especially going into
Yeah.
2025.
Okay.
And yeah, I think that that's a good place to start.
Okay.
So before we get started, y'all, I'm just warning you right now that this is, well, per usual, but this one for sure is a jam-packed, value-packed episode. So you need to get your pen, pencils, Apple Pen, notebooks, iPads, laptops, all of that, because this is the episode you want to do that for. And also I encourage you all to put your notes in the comments. So whoever has the
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 best
best
notes.
the
We'll
best
pin it.
note will pin it for sure.
Yeah.
So yeah, let me just see how good of a note taker y'all are. Okay. And maybe on a future episode or via social media, I'll share my notes, but we'll see. We'll see, because y'all might have something good, so I might not even need to share my notes.
Okay. So how do we want to get to, like, what segment are we starting on first? So I'm following your
Um.
lead.
Okay, let's start on. I feel like we should. Okay, let's start on global insights. I'm taking it out of order because I had a different order originally. Let's
Okay.
start with the. Actually, no. I'm sorry. I don't want to do that. Let's start with this investor education piece
Oh, so you want to pop out and show people?
right away, and then
Okay.
we can. Yeah, right away. Right away.
Okay. All right. All right. All right. Like, oh yeah, that something
Oh,
was
I
missing
see
that was
it.
on brand, but it's okay. Well, I'm probably sure it'll find its way. It'll find its way.
I'll say it at some point, y'all. I just
Look,
can't.
look, listen, y'all. We're still getting back into the swing of things. Look, we're still
Okay.
trying to
Hello.
find our rhythm. All right, so let's get to it. So if you were at the summit, you definitely saw some pretty cool things. And that we got to talk about. So I'll quickly go through it, and then we'll get to it. I'll try to fly through as fast as I can, but also keep it black and keep it brief, and also at the same token keep it value based. All right, so just a little bit of a brief, like, so that way people that need to understand why is it that we do this, like why we do what we do. So we always said that the problem we aim to solve was to inspire, educate, and also provide means of action. And so our main mission was always focused towards the wealth gap that persisted due to historical and systemic barriers, limiting the accumulation of generational wealth among Black Americans. Now, of course, it's not just Black Americans, but that is our primary target. Excuse me. I forgot, when you drink carbonated liquid death, it can definitely come back with vengeance. Um, so I mean, that was ultimately the main focus here at the Come Up series. And like I had asked everybody at the summit, I'll ask each and every single one of you that weren't able to attend the summit. So, how did we do? Did we aim to meet the mark in the time period that we did? Because it was a lot of jam-packed information and knowledge over those 4 years. So we hope that we ultimately brought forth some value to you. So just to do a quick recap, Jolyn, as it pertains to some of the things I discussed. Now, for those of you that need to understand timestamps, let's go ahead and clock it, because this took place, I think, July 20th. I want to say July 20th.
Yeah, I think so.
Okay, so, and I'm hearing a little bit of feedback on your end, just as a heads up. But
Really?
so here was the market thesis in which that I had placed forward. We said economic growth, moderate GDP growth at 2.1% in 2024, and then 2% in 2025, and then 1.8% in 2026. And then on top of that, I said unemployment rate would possibly be at pretty much peaking at 4.2%. I was a little off there, in the sense of 4.2, because it came in at 4.3. So can't win them all, but averaging around 3.8%, and earlier this year. And then inflation, core PCE, was forecasted 2.8% by the end of this year, and then of course 2.3% in 2025, and then 2.1% in 2026. So like I said, I wanted to hit the mark, but ultimately, sometimes you can't win them all, but hopefully I land close. Hopefully you have some form of a soft landing. We didn't crash, we just had a soft landing. And then on top of that, I said that the opportunities to look forward to as we move forward. And this takes you all the way, by the way, Jolyn. I know that you're currently muted for the feedback part, but the opportunity and everything else that I said, this goes all the way out to late 2026. So it doesn't just like go to 2025. And if you read the title and it said 2025, well, surprise, I'm going to give you something a little bit more. So I said that the opportunity definitely sits within the tech sector for growth, as well as health and biotech, and then renewable energy. Hopefully I was spot on there when I started in July. If not, this is timestamp, so of course I'm going to have to eat my own words, and I'm okay with that. Risk, I said geopolitical tensions, inflation and rates, as well as a potential recession that may hit us in May of 2025. And pretty much I just said that, persistent inflation risk, as well as, you know, like it's still being sticky, not coming down as we wanted it to or fast enough. And then, of course, recession probability. I think it's kind of like projected at the time that I said this. I said it was like 51%. I may have to go back and recalculate that as it pertains to where we are for May of 2025. It doesn't mean that we'll be in like a depressionary environment, but just a recession where things slow down, just for perspective. So when we look at it as it pertains to what's happening versus what is coming, I said pretty much artificial intelligence. We've been hearing the two letters for quite some time now. Right, Jolene? Okay. And so, which brings us to how we're getting here now. So AI investments are surging with 30% of US companies planning to invest in at least 10 million in AI in 2025 and up 16% from this year. So that's what you can look forward to next year. So if you're thinking about it 30%, pay attention. Like for those that were at the summit when you heard Mark Mahaney as it pertains to those investment dollars talking about companies like Nvidia, are they going to stop spending? Are they going to stop investing? No. And we've actually heard it from a few companies earlier this year as they were waiting for Blackwell chips to be released, that they said that they're just licking their chops waiting to make the investment. So there's that. So we're looking at pretty much a $300 billion pretty much AI market around 2026. So then we have a tech sector, despite some volatility, like for example, what we saw in Nvidia's stock earlier, it still remains strong. And same thing that I said for AMD, which is still my heavy pick going into next year. I think the same thing is to be said. So shout outs to the opportunity that AMD gave us for after its earnings release today. Renewable energy. I think that this is a huge growing sector as we continue to keep on tapping the grid, using AI services and more technological advancements and everything else that we see. You're going to need the infrastructure to be improved. And so that's going to be a lot of infrastructure that needs to ultimately come into play. And a part of that is energy, because believe it or not, computers, data centers, and everything else, they use up energy. And that's not only including, you know, the typical household machines and data centers, but what is coming down the pipeline that we haven't even built yet. And so those infrastructures are going to need to be upgraded. And then I said for healthcare and biotech, ongoing innovations in medical technology and drug development presents investment opportunities as well as we move forward. And so be ready for what's happening next. I mean, these are the major areas as it pertains to AI. So of course, we started off with large language models. Now we're going into large world models, industry specific applications. And then hybrid AI, which is the approach that aims to overcome LLMs and limitations in understanding context and generalizing knowledge. So this could be really disruptive towards education. Shout out to anybody that's out there in ed tech. And then, of course, we have efficient learning methods to reduce reliance on massive data sets. So these things, you're going to probably start hearing some of this language. Snapshot if you need this, or it's going to be here on YouTube. But be ready for if you see this on the startup side, or even if you see this on the publicly traded side, get ready to start seeing this language come through. And when we reach this language, then that's what lets you know that, okay, hey, we have arrived at what we were talking about. So just for some perspective. And then, of course, like I said, sometimes you have to pop out and show people. So this was my end of 2026 playlist, which I said Apple at 305 with AI as a feature and vision. And I know that we're going to get into that in a second. And platform extends, goodbye theaters. I think that that's going to be the next massive wave of disruption. Tesla, of course, robo taxis. I said this back in, mind you, I said a lot of this stuff back in July of 20. But again, so we now have part of that being fulfilled with robo taxi being unveiled. And then, of course, the next wave will probably be logistics, which is going to be probably the next tentacle that grows from that. And then, of course, Amazon AI chips become scalable. I think that we're starting to hear that Amazon AWS conversations are starting to hit the news waves. It's about damn time, where essentially we're starting to hear that AWS cost controls and everything else have gotten under wraps. So now that we're going to start seeing a little bit more, let's say, under control CapEx spending. Once you have CapEx spending, then that's when you start to look at profit margin expansion. So when you start to see revenue growth and everything else hit, I would look towards that as it pertains to Amazon scalability. So I'm looking at, here's to looking at you, Amazon, for essentially going on your run pretty soon. And then, of course, Microsoft's the next frontier beyond LLMs. So, of course, if we're talking about Copilot and everything else, and when I mentioned large world models, one of the things that people don't realize that's happening within like these companies is they build on their own infrastructure by eating their own dog food, but then they go to their massive enterprise clients and say, okay, hey, we're noticing from your user behavior or from your enterprise based behavior, these are the things in which that we're learning, but then tell us a little bit more about your problems that you're experiencing. And essentially from there, how else can we build solutions? And then those solutions get built, they're tested amongst their enterprise customers, and then they're pretty much opened up to everybody else on the wide masses on the overall platform. So be on the lookout for that. That's just a little cheat code. It's a dirty little secret that takes place in tech. But if you didn't know, now you know. And then, of course, the hidden gem in the background that funds a lot of these things is ultimately investment banking, which you're probably seeing from the likes of a JP Morgan. Now, at the time that I did that, JP Morgan was, I think, valued at 220 a share. Now it's at, or it was at 206 or 209, actually, a share. Now it's like we're at 224. So shout outs to you if you listen. So that's all I have for that as it pertains to our glorious presentation.
Is there still feedback?
No,
Testing, testing, testing.
you're all good.
Okay. Anyway, okay, so that's great. So it's also good to see, where your mind was in July 20th of this year. To see, a couple months later, and to see that the differences in, you're being on track. So that's really promising, actually. So, Mark, now that we have that as kind of like the backdrop and the context,
Yeah.
let's talk about some of these strategies from early come up series days. Like I'm talking about rolling fours, strike price formula, all of that. Like
That's fair. Give me a second to pull that up for a second, because I mean, if you've been following, dope. If you're new to this, great. Because essentially I can give a fresh new breakdown on things.
great. But before
So
they do that, Mark, I think we need to be amped up and sufficiently like ready. So what should
me
they
to be
put in the
amped up
chat?
and ready.
What should they put in the chat so we know like they serious about wanting to know the new? Because I mean, we don't have to. We can talk about the market and stuff like that. We don't have to talk about new strategies, new updated stuff. We don't have to. Draco says she's
uh
ready.
I mean, it's
I
up to
think
y'all. Like it's up to y'all. Like how is it that you guys see that you want me to play this out? So I'm whatever.
okay,
Whatever's
we got some
clever.
new news. We got some new news in there. All right, all right. Um, oh, we got some Dark Knight energy coming. Okay, Annette
Oh
has the.
Lord.
Okay, here it goes. Hi, Annette. Here it goes.
Here we go. Here we
Notification.
go.
We ready? We ready? Okay, so let me just first break down some of the highlights of the rolling fours. Is that what you're starting with first? The rolling fours?
Yeah, I got it. I got it ready whenever you are.
Okay, I'm ready.
Okay. So pretty much, and this became like a kind of like a cornerstone for a lot of the things in which that we did at one point in time.
Mm-hmm.
So if you remember this, great. And so let's see here. So essentially, the rolling four started off where it's like you had like 4 years worth of strategy of following a leap strategy option, and I can still hear the feedback just as a heads up. But pretty much, long story short, is you literally set it up where it's like every quarter, and for every year you're making four. Pretty much, you're making four positions within the market that are leap option strategies. If you start off with 5,000 or whatever the case may be, and then ultimately you set forth whatever your return target is. And then of course after return, then essentially you just keep investing, keep investing, and keep investing, and keep following the formula. Of course, the positions can change, whether it can be a call or put option strategy and a 1 to 2 year strategy. And ultimately, you just continue to keep doing that. Of course, The other main part of the rolling forward strategy is live with only what you need, and then ultimately what you don't need, or whatever it is that's excess, then essentially just invest that. Keep setting forth a strategy. You could either do 70-30, 60-40, 50-50. Or if you're in a position where you can't, it's like it's 40-60, where it's like 40% is investment, the other 60% happens to be your expenses, and find other ways to decrease your expenses. And over time, you get to a place in which that ultimately you could literally just live off of, say, for example, your investments and keep it going as long as you see fit, and literally have a monthly dividend portfolio that ultimately becomes your income. So you go from growth. It's literally a short-term strategy to get you there. Instead of going 20 years out, it can typically be anywhere from 4 to roughly 10 years of a strategy that can get you there as it pertains to literally being able to pay yourself and live off of what is it that you invest. So it's a simple possibility. It's a simple possibility. Is it 100% foolproof? Absolutely not. But I mean, from what I found, especially meeting a lot of the cousins at the summit, a lot of the folks who stayed tried and true to the rolling force strategy, I mean, it was wonderful hearing a lot of your successes and everything else. So there's that. Now let's have this conversation as it pertains to um, this Dark Knight strike price formula. Now, as we move forward, I just want to make it simple for everybody, because I realize that everybody's like, well, how do you put the strike price and all this other stuff and all? Look, let's just keep it simple. And here's a simple cheat code. That way you don't have to overthink it. Literally just set a 1% to 2% target. Either a 1 to 2% target over a 1 year or a 2 year. Now, of course, it may mean that you may just be on a one contract, or say, for example, whatever the capital looks like, but just keep it simple. Keep it simple for yourself. And essentially the other part to that is, given in the sense that you're going into a market that's probably going to like have some fluctuations and some volatility that may step in. It's a way to also protect yourself there. Naturally, you typically have S&P 500 tech companies, or mostly your S&P 500 typically grows at a 7% annualized rate of return. So if you're playing the SPY on a leap option call with a 1 to 2% target over a 2-year span, you're bound to probably hit anywhere between 7 to roughly 10% as it pertains to a return in the stock, and then ultimately you're well past your strike. Again, that's ultimately for folks in whom wish that want to keep it simple, set it and forget it. Well, not forget it, but just not have to put a lot of unnecessary pressure on themselves. A vast portion. Oh, go ahead.
So the formula itself, just so we're clear, the formula itself hasn't changed. The main thing that you're changing is the target.
Yeah, the target is just changing as it pertains to choosing your strike price. I mean, now if you're a little bit more advanced as it pertains to choosing your price targets, then great. But if you want to keep it simple for yourself, a 1 to 2% target. So whatever 1 to 2% increase is in the current price is great. So like, for example, if I'm looking at, let's say, let's play as an example. Just want to put that out there as an example. Let's say if I want to go look at, I'm going to go to our friends at Barchart. And let's say if I wanted to look at an AMD, because AMD right now is getting hammered in the aftermarket, if I'm correct, right? Okay, sure. Well, we got some. All right, I won't sign in yet, so that way we can just keep it simple. All right, so present, share screen, boom. Let me know if you guys can see it. You should be able to see it.
It's small, but I can see it.
We shall blow it up. Sorry, you know me. I like to look at small text. But as you can see today, AMD got hammered by a 7.6% in the aftermarket. This produces a huge buying opportunity for folks in whom wish are looking at AMD over the next year. So is AMD going to stay exactly where it's at over the next 12 months to 24 months? Absolutely not. So again, it's like, if you're looking at like today, I'm probably, if this was me, I'm looking at it in the sense of waiting for the dust to settle, or looking at how the stock behaves tomorrow opening up. But essentially looking at it at today and what happened in today's aftermarket as a buying opportunity, and waiting to see, okay, hey, well, is not really the coast clear, but is this a strong enough buying point for me to enter into the position? And so for me, it's easy. Set a simple target. I could set a target at, let's say, 168, 169, and then or 150. I'm sorry, not 168, because that's the what happened during the market, but 150. Let's say 155, 156, and then done. So I mean, I'm keeping it simple for myself, in the sense of not having to like put in a bunch of unnecessary worry as it pertains to like where the market is going or what the stock is going to do in its volatile periods. I'm just picking a point in time and saying, okay, hey, well, do I believe that price will ultimately get better from here? And will there be a buying opportunity based upon the things in which that I know about the company fundamentally? Yeah, now, of course, there's things in which that also come into play as it pertains to sentiment. Hence, the reason why I would probably be a person that's waiting to see exactly how things settle, wait for the dust to settle. But then after that, it's like, okay, hey, is it enough conviction for me to step in right now and ultimately buy the stock?
All right, so that's simple enough as far as targets and when you're thinking about what price you should go for in your entryway.
Mm-hmm.
And bar chart is always helpful for that. They have so many different tools, and I'm sure they have a host of new tools that we haven't even talked about. But make sure you explore bar chart. I think we still have there's probably still a discount out there under the come up series
Yeah.
for bar chart.
Yeah.
Okay.
So friends at Barchart, if you're sitting in the chat, go ahead and post it. If not, I'll get it tomorrow and I'll post it on my Twitter account. And also we'll post it on the come up series.
Okay. So with that in mind, so there is a full episode on the rolling fours.
Yep.
So be sure to check that out. It's if you just type in rolling fours on within our channel, it'll pop up. For those of you who aren't familiar or you need a complete refresh. Um, and same with strike price formulas. There's episodes about that as well. I probably in the starter pack.
Yep.
So those for the new people, but we're going to move ahead. Okay. So now when we
Mm.
think about global impacts, and I want to put this into context with the rolling four strategy,
Yep.
how do what's happening, like how does what's happening in the market and happening on the economic scale when we think about like global impact, how does that impact our approach to the rolling fours? Like what things should we be thinking about as we are setting those prices?
Good question. Good question. So how I here's how I look at it from a standpoint. Let's say there there's no such thing as any stock that's not impacted by any type of economic factors. You'll never find a stock that's completely Teflon. They may do better than other companies do, but in the grand scheme of things, everybody has their vulnerabilities. Okay, I may have to shut off the liquid death. Okay. There may be vulnerabilities within the space. So, for example, I'll give you some examples. So, in a rate sensitive environment, right, when rates are high, then companies like Tesla or any companies that ultimately have to think about future cash flows, then in higher interest rate environments, that's going to impact, especially when we start talking about companies as it pertains to debt on their balance sheets and stuff like that, because sometimes they can be variable and essentially they can, potentially affect any potential profit margins in the future. And that's ultimately what drives a lot of stocks within the market. So a lot of stock that you see today is not the value. The value today is based upon what people believe, either 6 months, 9 months, a year, or 2 years down the road, whatever metric that they're using. And so essentially, what they're saying is if the stock is trading at this price, then I believe that essentially that it will meet this valuation at this point in time somewhere down the future. Now, of course, when economic things impact that, so let's say if the price of oil goes up, then that's going to impact specific stocks that are definitely huge as it pertains to having vulnerabilities on, let's say, energy and oil. If we have companies that are like, let's say, if we have issues at the port where you
Mhm.
see port blockages, that could affect companies like, for example, Apple, or companies that sell products, uh, any type of products within the marketplace. Why? Because, of course, it can either drive up price due to scarcity, or essentially it could drive down price as it pertains to having an overlap of, say, for example, inventory. Some of the things in which that we look at as it pertains to geopolitical. Now, of course, we could say, for example, what takes place in China as it pertains to tariffs. Well, who does that cost roll over to? That rolls over to each and every single person that's consuming the product or service, most likely product. And so, again, that's going to affect as it pertains to their future profit margins down the road. Now, a company that has strong profit margins typically looks anywhere from about 50 to roughly 66%, or even some cases, you know, where we're at. You can see some cases 80% profit margins, which is very rare, but essentially it happens. Um, and so, with that being said, again, it's always going to be in the sense of, okay, whatever the economic impact, always ask yourself this simple question: how is this going to impact this company's profit moving forward? How is this going to affect their profit margins over the next 6, 9, 12, 18, 24 months down the road? If you can see that there's vulnerabilities there, then most likely if you see it, somebody on Wall Street probably also sees it as well, or other investors around the world see it as well. So those are things to definitely take into consideration as it comes to like either picking a stock price as it pertains to your trade, or say for example setting up a leap option strategy, knowing exactly where we're at. For example, here's a lesson learned from 2022. My thesis was 100% correct as it pertains to fundamental analysis. Did Wall Street care? No. Even like having conversations with Dan, he would literally sit there and have tons of funds that were ultimately paying him to literally give his advice and his analysis and everything else. And his analysis was solid, but yet at the same token, sentiment said that everybody just wanted to go short. And what happened? The market went short. And then of course, I mean, there was other economic factors that kept compiling on, but ultimately people wanted to short. It didn't matter what you told them. Even if your data and your analysis was spot on, it didn't matter. They still wanted to short. And that's ultimately what happened. Now, in this particular case, I mean, and keep in mind, we saw such a bull market run all the way up to that point in time. And then ultimately we saw a bear market turn. Now we're seeing a bull market that has now sustained itself for 2 years. So typically, when you see a bull market that has sustained itself for 2 years, you're typically going to see some more bullish activity for it's typically over the next 1 to 2 years as it pertains to activity. So knowing those things historically, but also keeping into consideration all the other factors that I had just said, kind of like starts to help you paint the picture. It's kind of like, well, you start off with the stock, which is like, okay, hey, you stencil it out. And then as you start to add more data points, you start to color in the image, and the image starts to look a little bit more fuller and starts to look a little bit more detailed. That's ultimately what the details do for you, the more data points that you start to add in.
Yeah, I would start thinking about like with the rolling forwards, if someone was going to implement it now, I would think about how much money total would I invest. So I would look at my budget. I would look at income. I would look at future income. Like if I worked and I was getting raises and things like that, I would think about those things. Then I would take that number and divide it by 4 so that you have money set aside once a quarter
Mm-hmm.
to invest, right?
Yep.
But like if you do it that way, then essentially that's the whole point of the rolling fours. Like your investments are rolling.
Yep.
So if one fails, maybe the other 3 hit. And if you're taking into consideration what's going on in the world, like for example, we are in an election year.
Yeah.
Election years always have
Fluctuations.
drama, whatever you want to call it. It's always present. And so you may think to yourself, well, start thinking about like, okay, well, what areas, what industries are going to be maybe potentially less impacted?
Yep.
Or if it is going to be impacted, by how much? So that you can start setting realistic targets, and then hopefully you still come out on top.
Yep.
But if you don't come out on top, there's still lessons to learn from that. Like 2022 was a whole lesson. Like, let's just put it that way. It
But
was
that's
like,
the point, though. It's like, like we learn lessons when the market goes up. We learn lessons when the
mhm,
market goes down. I mean, we learn lessons when the market is mid. So it's like there's so many different lessons in which that you learn across the process. You
mhm,
know, it, and then on top of that, it's like the knowledge gained versus capital earned and everything else. I mean, look, nobody's ever batting 1,000. I mean, show me a person that's batting 1,000 over an extended period of time. I'd really love to meet them. Like I like real talk. Like all shade aside, you don't see no shades on my face or anything like that. All jokes aside, reality. I'd love to meet this person that is truly batting 1,000, that has never lost an investment over an extended period of time. Like, look, I want to shake your hand and say, hey, kudos to you. But I mean, in reality, that's just not the case. And that's the reason why I could truly say I haven't met anybody that has literally batted 1,000 or batted perfect in when it comes to their trading journey. Now, again, moving beyond that, I mean, it's more so in the sense that, like I said, your analysis and everything else can be correct. Sometimes it's just a matter of when. I mean, but it's again, the old adage is time in the market is better than essentially trying to time the market always. So again, that's an old adage, and I always say old things are good things.
yeah. So, okay. Now, that's actually really good to think about as far as like the global impact. Can we talk about some economic factors? Like, let's talk about what's happening with the dollar and oil.
I mean, yeah. So the typical reason why you see that the oil goes up, I mean, simple rules of thumb. So simple economics that also apply to anything, including a commodity like oil. So when oil prices go up, then that means that production has been cut. When production is ultimately increased, then oil prices come down. Like that's it. It's like the more you increase the supply, then the demand ultimately, like, okay, hey, the demand is still going to be the demand, but then is the price justified if essentially the demand is stay stagnant? Now, if oil production goes down and yet people are still at the demand, and now we're finding ourselves in scarcity, then of course that means that essentially that your prices are going to go up as it pertains to what the oil price is. And of course, if the price, and here's the interesting thing, look at the weather and also look at oil. You can find that there is sometimes a direct correlation that if you could predict the price of, you could predict the price of or predict the weather, you can predict the price of oil. I mean, whether or not it's a 100% foolproof plan, I wouldn't say it is, but again, it's another data point. As it pertains to the price of the dollar, I mean, of course, the biggest question is going to be the debt bubble that's ultimately ringing off in everybody's hands. Currently, the U.S. right now is spending about a trillion. It's spending $1 trillion just to make payments. Let that sink in. We're $35 trillion in debt, as it pertains to U.S. national debt, or 36 trillion, or 38 probably by this point. But then again, at this point, we're also looking at $1 trillion as it pertains to payments on that interest. Not good. Not good.
Can't imagine having trillions of dollars in interest on. Oh my gosh, Lord. Okay, so if we take that, we think about those things in this context.
Still trying to get past that $1 trillion payment, aren't you?
Yeah, because I'm like, dang, I can't even hold that in my head. So
Look,
we're thinking,
I'll put something on it.
okay, so with that in mind, then, um, I don't know. I'm thinking through like, okay, remember your top five from last
Yep.
week?
So
Or,
AMD, Meta,
mhm,
Netflix,
mhm.
I want to say Tesla and Microsoft.
Yes.
Okay.
So if we're thinking about those, let's walk through like how um the global impact as far as I would say like international markets. Maybe let's look at China, for example. Uh,
Mm.
yeah, I want to know like how we should go about thinking through that when it comes to those top fives.
Well, I mean, a lot of the top five there is that, like, they do business in China. Don't get me wrong. China ultimately skirts around the tariffs by ultimately going through like places like Mexico, so that way they don't have to hit the costs. I mean, there's ways around it. Um, in other arenas, like it's not just Mexico, it's other arenas. But I mean, if they want the tech, they're gonna get it. Like let's just put that out there. Two, looking at like companies like what's happening globally. Like for example, let's take Netflix for example. Netflix is probably the easiest example.
Okay.
Now we saw like certain countries, like the entire world, kind of like was experiencing areas of like either recession or high inflation. I mean, Europe got probably hit the hardest, and they're probably just in the process of going through recovery. It's still a road back on to recovery, but again, they're still there.
Let's talk
Um,
about that in a moment. But
yeah, so let's think about it though. If we look at like what's happening in Europe, how many of those folks literally had to make conscientious decisions as it pertains to high inflation? How many of them had to choose their Netflix versus buying groceries?
right, they were like,
Sharing the Netflix password and everything else. I
make
mean,
that down.
once upon a time, Netflix was a very economical play. Now they're
Right.
just like, we'll hit you with some of these subsidies, but I mean, we're still gonna get that change.
Mhm.
Um, all jokes aside, I look at companies like Microsoft though, and its Azure platform. I don't see them like slowing down. I think that I see that I think I see that accelerating. Especially when we think about AI plays and software on the enterprise level. I mean, people think that Microsoft's bread and butter is on the consumer level. It's not. It's enterprise. That's their number one customer, and then everything else after that is secondary. Doesn't mean that they treat them anything less, but we know where their bread and butter is, alongside with government, which I kind of like tie into enterprise dollars. AMD moving into the AI space to challenge Nvidia. Now, will they unseat Nvidia? No, they're not going to do that. But to literally define yourself as a dominant position within the marketplace against like the Intels of the world and anybody else as the dominant two, I mean, there's nothing wrong with that. I take that any day, and I think that I think that's an easy, sure face bet. Of course, could be wrong, of course, but I mean, I'm very, very confident that that's the way that it's looking. Um, Looking at let's say Meta. I mean, Meta has completely like transformed the company from not only just going through your simple social media. You don't even really even see them talk about social media during their conferences as much. I mean, it's kind of like social media has become the feature alongside with the AI, and now the main feature is the main product is the infrastructure that surrounds the entire ecosystem that you're buying into and that you're playing in. I think that that's huge. Um, and so notice what I'm saying about each and every single one of these companies, like from Netflix, which uses AI, from AMD, which is building infrastructure into AI, Microsoft, which is an infrastructure play within AI, Meta, AI as a feature also, and then of course, what is it? AMD, Meta, Netflix, Microsoft. What am I missing?
Tesla.
Tesla. I mean, well, I feel like that's simple. I think
Mhm.
that's the reason why I didn't have to mention it.
Yeah.
So with that being said, are there geopolitical tensions and risks? Yeah, but is it enough to ultimately stop the party? That's the thing that you got to look for. Is what I'm hearing enough to like spook investors to say, "Ooh, whoa, that could spark." Look, hold up, like the music needs to pause for a second. I don't think that we're at the part of like a Kendrick Lamar song of saying that we have to watch the party die, but I think that we're at the place of saying that okay, hey, like certain moments you got to take a pause in between songs. Maybe people need to go to the bathroom, get some refreshments, whatever it is, go get some fresh
Right.
air. But I mean, outside of that, I don't see the party. I don't see the party stopping as it pertains to those top five companies that I just mentioned.
Okay. Well, speaking of lessons,
Yeah.
especially from 2022 in both directions,
Mm-hmm.
what did so despite fundamentals,
Mm-hmm.
being solid, what were the signs before sentiment really set in? That kind of like turned things the other way.
I think the fact that like the conversations as it pertains to inflation really starting to flare up, and then also the fact that it was inflation rising, and then also the conversations, the backdoor conversations that were being had about the Federal Reserve starting to tighten.
Okay.
And so with that, that's enough to spook the market. Of course, you see the bond market kind of like setting the tone. The bond
Mhm.
market starts to the bond market starts to give you an early precursor of telling the story. And sometimes it's easy for us to easily forget about the bond market because one, the bond market is not very sexy.
Oh,
um,
right.
it's like the only time that we talk about it is when okay, it's like the parent coming home like where it's just like, okay, like clean all this up. Um,
Mhm.
yeah, so I would probably say that it was those three things: the bond market, the Fed, and then okay, the inflation, like getting worse than versus what everybody expected. I think that those were the things that ultimately like set the tone. And then of
All
course
right.
sentiment, like literally, like you can have the great, like fundamentals can be the greatest. Sentiment will probably dominate fundamentals, like
Which is
all the time.
wild.
Like
That is so
it
wild.
never ceases to fail.
Okay, so we are in spooky season right now. Um,
Yes.
so so what's so spooky about this season besides elections?
Well, I mean, what's spooky in this season outside of elections
Hmm.
is are we just talking about like within this moment in time right now?
Hmm.
Is the number one thing is the US economy going to slow down or is it going to pick back up? And honestly, like again, it's going to come back to us watching the Fed. Now, the market loves when the Fed cuts rates. Like let's just put that out there. Like,
Hmm.
the market gets very excited. Like it's like, "Oh, you're giving me a steroid shot or an adrenaline boost or a vitamin B12 shot." Um the market loves that. And it always looks a little, once it's had its first hit, it's looking for its next hit. Oh wow, the market's starting to sound more like a fiend. Uh, but I mean, in the grand scheme of things, right? What spooks the market is uncertainty. That's the number one thing. When things are uncertain. And the reason why you see volatility right now is because of the fact that, honestly, here's a key sign to look at. Watch on Friday, we have a jobs report. I think we have the unemployment rate coming out. I think it's the unemployment or jobs numbers that's coming out on Friday. Now, of course, we have the election coming up next Tuesday.
Hmm.
It's going to be very interesting to see exactly like, okay, does the market truly care about the election or does it care about the jobs numbers going into next week? All roads lead towards Tuesday and deciding not only just who's president, but also in the sense of like what the direction of like who controls Congress. I think that that's going to be the major thing because that's going to set precedent. And a lot of the wealth out there is definitely sitting back and saying, okay, hey, well, what does this look like?
Hmm. Y'all can go to, isn't it, is it QuiverQuant that has that tracks
Mm-hmm.
Congress and their investments?
Yep.
Okay, so let's just take a breath for spooky season and some water. Hold up.
Stay hydrated, my friends.
Right. Stay hydrated indeed. Did you say everything that you wanted to say about Europe?
Yeah, I mean,
Okay.
outside of Europe increasing its GDP by ultimately taxing tech companies that are here in the US and also agriculture, I mean, there's nothing really to say.
Okay. So let's talk about some other, I mean, we talked about tech trends last week, but
Yep.
let's go a little deeper in the tech trends because I
Okay.
think that that also helps inform um rolling force
Okay.
strategy.
Okay. So what do you anything specific that you want to ask me or is there something that you want
Um,
me to hit?
well, could we talk about like, well, definitely the two letters, AI,
God.
of course. I mean, it's a major trend.
Is it
I
though?
mean, it well,
It's a
it's a
feature.
it's,
It's a
yeah.
feature. It's a feature.
Well, I wanted you to say more about the feature versus product,
Okay.
just to kind of drive it home.
Okay.
Yeah.
Okay, so let's talk about it because I realized that certain people were like really asking me some serious follow up questions, like, "What do you mean AI is just a feature and not a product?" Okay, name a company that literally said like, if you really think about it, like, I mean, OpenAI sells what a large language model that ultimately that you can talk to. Is that the feature? Probably not. I think the feature that's going to be well, that's the feature, but I think that what's going to be the overall product is the infrastructure system that they're building around for multiple tool sets to leverage the AI to do XYZ. Now, of course, certain AI companies, yes, that's gonna be their bread and butter product. So Claude or Anthropic, Perplexity, OpenAI, that's literally going to be their bread and butter. I mean, you can even throw Palantir into those conversations. But I mean, when we think about the masses, like Nvidia literally uses its core products to literally build strong services and strong products that support AI infrastructure. So, AKA a feature. If you look at Apple, Apple Intelligence is not the main selling point as it pertains to any of their products. It's the feature. When you look at AI at Microsoft, and this is the best example. Microsoft is their claim to fame is Windows based products, Office products, or Microsoft 365, whatever they're calling it at this time. I mean, it sounds like a daily vitamin. And then on top of that, you also have other things like Azure. Now, of course, does AI sit within those same infrastructure pieces? Yes, but it's a feature. Like it's definitely a feature. When you look at, say, for example, going beyond, like let's say Netflix using AI. AI is a very helpful tool and helpful feature as it pertains to helping you discover new content, as well as them learning things about each and every single one of their viewers. But let's not get it twisted. If it's not for using S3 cache on AWS services for where you could pull those videos off in an instant and watch it at like almost pixel perfect for whatever like network that you're on, whether it's, overpriced Verizon or T-Mobile, then essentially, I got some shade for Verizon, because if you go look at the 5-year stock chart for Verizon, okay, all right, so. But yeah, I mean, they're features, and there's nothing wrong with that. They're very powerful features. You can say that they're very powerful features, but to literally sit there and say that, for the masses, that these are products that stand on their own, because a product can stand on its own. Like that's the part to understand for when we look across the base.
Mm-hmm.
Products stand on their own. Like if you need it to be able to like literally sit on top of something, that's a feature. I'm sorry. Like that's just like listening to your favorite artist and essentially like, okay, hey, Tyler the Creator is featured on here. Okay, great. But you purchase a Kendrick Lamar album. But, he just happens to be featured on that album. So again, it's like, let's not get it twisted where it's like, sometimes we tend to run away. Now, will we get to a place where AI becomes a product? I believe so. Where we start to see more AI-based true products and not features? Yes. Are we there yet? No. You have to remember, it's like LLMs and a lot of the things in, like, for example, generative AI is still very much so within its infancy. We're talking about like literally in some cases, it could be a range between 3 to 5 years. That's still very infant when you think about like everything else that comes into play. Like these companies like that are using these tools and everything else, they're just starting to walk. They're nowhere near sprinting and everything else. So, yeah.
Which is exciting.
It's very exciting because it lets you know exactly where we are in the cycle of things. I mean, look at like companies that are Fortune 500, like they're massively investing. You got Amazon out here making massive acquisitions and ultimately throwing in an extra $50 million towards the acquisition. So that way you don't go talk to any of the competitors towards the deal. You got a lot of these companies doing the exact same thing and essentially saying, okay, hey, well, we're in our growth phase right now. And when we're in our growth phase, we spend. And on top of that, we're scaling. And that's what you should be prepared for. And ultimately, when you got cash to do that, I mean, that's what's going to come out strong, even when we're in the midst of a recession.
Okay, so you mentioned merger and acquisitions. Is there, mainly acquisitions, but with merger and acquisitions,
I got a hot take for y'all.
Yeah, let me hear it.
So there's a reason why you guys don't see publicly traded. There's a reason why you don't see a lot of companies going public. Oh, she had to get some water for this one. There's a reason why you don't see companies going public. And the reason why you don't see companies going public that much is because of the fact that when you look at the overall publicly traded market, there's no liquidity. Like, where's the liquidity going to come from? You got investors that have been crying for companies to go public so that way they can get out. And ultimately, it's like, okay, hey, like we've seen that a company goes public, have a great week, and then the next 12 months they're in purgatory. Who wants to endure that? Especially when you can see your valuations get crushed. So there's that part. Then on top of that too, then you have to wait for investment banks to pick up coverage. So that produces a problem within itself as well. So what do you see happening right now? Pay attention to private equity, pay attention to hedge funds that are ultimately stepping in and buying companies. Like that's going to be the biggest thing. Now, of course, like people are like, well, Mark, how do we capitalize on them? I don't know what to tell you. I mean, unless you're working for a private equity company or something like that, or unless you're working at the company and it gets acquired, then, 9 times out of 10, you even have some companies that are looking to take their companies private. I mean, look at like how many companies that Microsoft has. Like, if you get the chance, go and look at how many game studios Microsoft has acquired over the last, let's say, 3 years. Just 3 years alone. Look at how many companies that they've acquired. Look at how many deals that they've acquired. Now you've seen like even in the venture capital space, now you got venture capital and then now you got corporate venture capital where those same Fortune 500 companies are following in the same rubric that Google set forth as it pertains to Google Ventures. Now you see Amazon, Microsoft, Apple, all these other companies making their venture capital investments from a CVC side. So when you sit there and say, okay, hey, well, where's the liquidity going to come from? The liquidity in the publicly traded markets to go public is kind of dried up. So, and we had this massive inflow of companies that went public during the pandemic. So, look, I think the market is ultimately tired.
Wait, these
Listen,
spirits.
I mean, think about it. Like, look, these spirits and everything else, like, they were just like, look, after all these SPACs and everything else that ran through, like, think about it. Look at how many SPACs went public during the pandemic. Now, here's an interesting question. How many of those SPACs still survive today?
We probably need to look that up, but I imagine not too many.
I could probably count maybe on one hand, maybe on two hands, but it's not a lot.
Yeah.
So again, like those are the things that people need to pay attention to as it pertains to like what's happening across the entire landscape as it pertains to this market. You know, yeah, and then of course watch the 3 month versus the 10 year.
Someone asked where is better. I had that question too, but then I saw some movement in the back, so I saw him.
Chilling, enjoying his best life.
Okay, so in our last 3 minutes.
Mm-hmm.
Okay, well, there was one thing that is on my show notes that we didn't talk about.
Let's talk about it.
And something you wanted to mention earlier about it's too
controversial.
No, I don't think it is. You're talking about J.P. Morgan.
Oh Lord, J.P. Morgan. Man, that's unfair. Like, Jolene hit me with questions with no context behind it, and then I have to like literally go through the Rolodex of all my knowledge and information.
Well, the fraud situation.
Oh, listen, listen, come up, cousins. I hope that y'all been playing on the straight and narrow. Look, listen. I don't want to hear nothing as it pertains to folks participating in any of these, like talking about I got my lick out of JP Morgan. Look, JP Morgan gonna lick right back. I don't know if you want this. I don't know if you want that kind of smoke. So no diddy. So yeah, I would just say that literally looking forward, I mean, it's an unfortunate situation, but look, for a company that handles $10 trillion a day, that's not the type of company that ultimately that I'm trying to out here perform. Like, anytime when somebody says run the play, listen, that's the new modern day, like, okay, run the other way. When somebody says run the play, run the other way. Another thing that I want to say that also, like, for example, I just want to put that out there. I'm voting for Kamala Harris, and that's it. Like, don't at me, don't do nothing. You finally got, like, people kept asking me who am I voting for and everything else. I voted. My wife and I voted for Kamala Harris. That is that.
What's interesting is, before the Come Up series, we never really got into the politics. But honestly, Mark, this election year is so critical and so crucial that, some people say, oh, your vote is personal. No, your vote impacts me. Okay. So I'm going to need y'all to get in line and vote accordingly. There's just too much at stake to be standing on the sidelines right now. And I really do mean that. You can look at it from an economic perspective. You can look at it from long-term trajectory. You can think about your legacy, you can think about your kids, you can think about the short term, you can think about what's happening on the global stage.
Yep.
But I'm telling you right now, if you do not vote in a
Well,
way that
look,
makes
you got folks that have come before you that couldn't vote. Now, I understand if the candidate that you see on the ballot does not reflect you. It's sometimes it's like buying a stock. Like for example, like buying if you had to buy AMD as an option tomorrow, and you
Mhm.
don't know like okay, hey, what is it going to look like? I mean, you have some data points, but again, it's like nothing is ever set in stone. So it's kind of like sometimes you, especially when it's bad like this, you sometimes have to hold your nose and ultimately make a decision. I mean, the beautiful thing about like where we are in our election process and also like who we are as a country, that's your right. Like you have that right to literally do that. Just remember, there are folks that came before you that did not have that right. So just remember, if you choose to execute that right to vote, or to execute to vote, or even not to execute that right to vote, that's your decision. You have that freedom to do so, but just understand the things in which that are at stake. I vote based upon my economic interests. My wife does it. I'm probably sure that Jolene does it. Everybody votes towards their economic interests. It's not my duty to tell you guys exactly who to vote for because that's not my stronghold. I'm not a politician. I typically steer clear of politics. I focus towards the economics. And when I think about where the economics fit me, that was the decision in which that I saw that fit best. You make a decision that fits not only yourself but your children and what comes later after you're done within the marketplace and they're still in the marketplace, what's going to impact them and what will the country look like. So again, make the decision that's best for you, execute your right, and like I said, just know you have that right to whether you're not you want to vote or not. But I hope you go out there and vote.
I think you're nice about it, Mark. When you said, vote for, what's best for you. I need y'all to vote for what's best for me too. Okay? Like I'm serious. I'm so serious. I'm not playing. I'm not trying to be losing rights under certain people, y'all. And I don't think you want your mom, your daughters, your nieces, you don't want them to lose rights either. So vote appropriately and just vote. Okay? Vote. If you're the type of person that doesn't vote, and so you're like, I don't vote, whatever, vote for your mom, vote for your sister, do that on behalf of them. Because the way things are set up, the women are going to be the ones who are impacted. So I'm appealing to all the men out there. This is your opportunity to really show if there's a woman in your life that you love, vote for her, vote with her in mind. That's all I'm going to say.
Okay.
So we're celebrating, the appropriate candidate. I'll know that y'all did the right thing, but it's just too much at stake. And I normally don't even talk about this, not on here. I'll talk to my friends and everything, but there's there's too much at stake. So
Facts.
don't
Facts.
play in my face.
Mark, they think the market is pricing in a Trump win. Does that mean the market dumps when Kamala wins? I don't know. I mean, because it's not just about who's president, but it's also about who controls Congress. So
Right.
essentially, like those things can come into play. And that's why I said there's so many different combinations, whether Kamala wins or Trump wins. Or say, for example, the candidate that you wanted to win, but then they don't have the Congress that controls the House or the Senate. And then that opens up a whole different set of issues and everything else. So again, it's like, of course, everybody's hedging. Everybody's looking at it in the stance of what impacts them best. I can truly tell you what the conversations that I'm hearing from my side of the table as it
Mhm.
pertains to people that I talk to. It's definitely going to come down to taxes as it pertains to the wealthy or what they're talking about. But keep in mind the taxes that you pay impact your schools and everything else around you. Um, and then of course as it pertains to the financial fitness of the country. On the other hand, it's another thing as it pertains to other significant issues in which that people who have felt like they've been forgotten,
Mhm.
they're probably voting based upon those types of things. And so is the market going to be volatile leading up till Tuesday? I think so.
I'm
So
laughing at these comments. Some of
yeah.
y'all are out of order.
So somebody said what?
Somebody is King Rail is out of work.
Well, I mean,
Oh my gosh. Okay.
they actually have things on E-Trade where it actually, or any of your brokerage accounts that actually show you how to actually execute an options order. So like, and we also have done that, I think, on a previous episode, long before. But yeah, each platform is very much so different. So to literally go through one platform and you're not on that platform, it won't really quite help you, because Schwab is definitely different from Morgan Stanley E-Trade,
Mhm.
and the same thing for, let's say, TD.
But you can actually call them. I mean, people work
You
there
can
to
call them. I mean, yeah, you have to pay like possibly a nominal fee as it pertains to them executing the position for you. But I mean, if you want to get in the position, you'll get in the position, and they look at it on a real time basis because they're working on the market maker side. So,
yeah. Well.
yeah. So, I guess to leave it on a positive note and on a good note. One, I want to thank every single one of you guys for watching. Of course, like we said, if you have the opportunity, go vote. And I think Jolene's words were definitely heard and felt. Two, like I said, as it pertains to looking at 2025, it's funny because we actually gave you guys a cheat code for 2026. So if you're paying attention, you may have to go back and pawn the replay, but it's there. It's up there, Steve. It's up there. But yeah, so I mean, anything else outside of that, like, look, it's not an emotional process as it pertains to going through and making and executing within your portfolio. Like, that's the one thing I will probably tell everybody: don't make it an emotional experience. If it's an emotional experience, take a step back and then ultimately reevaluate and ask yourself, why are you emotional about it? I always tell people, never trade off of emotion. Also, don't just trade off of what is it that I say or what Jolene says. Like, take what we say and then ultimately run it against, say, for example, your own, do some due diligence on it. And then also like, see if the numbers or if the data makes sense. If it doesn't make sense, I'm okay with being wrong. Feel free to like tag me and say, hey, Mark, this was incorrect. Okay, I can learn. But hopefully that this helps you in your process as it pertains to, like, picking out. Shout outs to like some of the companies that I've already placed in my top 5. And feel free, tag me as it pertains to what you think your top 5 are. Like, either write it in the comments down below. Also find us on Twitter or on, I guess, Threads or Instagram, whatever it is. I don't really use Instagram that heavy, so you'll probably have to find me on X. Or but yeah, let me know what your top 5 are. I'd love to hear what your thesis is behind your top 5. I think a lot of folks are going to be focusing towards renewable energy, towards energy-based companies. Some folks are going to focus towards healthcare and biotech. Nothing wrong with any of those things at all. We can all provide something. We can all learn something. That's the whole point. So until next time, I'm Mark Monroe.
And I'm Jillian GC, and the place to be, totally.
Oh, okay. I see what you did there. Look, she was working on her Freestyle Fridays. Okay. Well, this has been the Come Up. I hope that you guys have enjoyed today's episodes. If you guys like today's episode, go ahead and hit the like button. We would really appreciate that, so that way this gets out to other people. And also share this with someone. Share this with, let's say, 3 people, and also start a conversation. We'll see y'all in 2 weeks. By that time, we'll have a new president, y'all. So
yeah, put your notes
and
in the
best notes, also best notes,
yeah.
get the pin. So we'll talk to y'all later. Have a good night, everyone. Peace.